morning. It's morning here. Good morning, good afternoon, or good evening, depending on what time you're watching this. It is Sunday, December 17th, and we are going into the final full week of 2023. We are just coming on our 250 plus trading sessions that we get in a year that will end as we go into the new year. And in 2024, there will be another 250 plus trading sessions of the year. I never really did the calculation on that, but because you do have, I did actually, but I'll do it for you. Because you have 250 trading sessions in a year, and you have 6.5 hours of regular trading hours in a year. That's 625 hours in a year, or times 60, 97,500 minutes in a year to trade from opening bell to closing bell, because, we have those half-day sessions that comprise the other ones. Once again, it takes a little bit of going back into your memory to remember things, to bring them back up to the forefront. And I was mentioning to one of the one-on-one calls I did on the weekend of a colleague of mine I've known for better part of 15 years. And I mentioned to her, I would consider him to be one of the top 3, if not top 5 traders I have ever known in my life. And the strategy that he had living on the West Coast, so he's on Pacific time as well, so you can make up all the excuses in the world about how you can't or can get ready for the market to open. And this guy would have 3 trade setups for every trading session. He'd have 3 trades he was looking for. If those 3 trades, any one of them set up, he'd take it. If it didn't come to his setup within the first hour of the day, boom, laptop's closed, out on the golf course. Now, we bring back the calculator again, and you've got 250 plus trading sessions a year. And he's looking at 3 setups for each day. It's 750 proper prior planned trade setups that he's looking for. And out of those 750, even if you only got 10% of those, 75 trades a year, 1.5 every week. If you got 2 of those trade setups, if you got 20% of those trade setups, 150 trades, come on, you're doing 3 trades a week, and they are coming to you. You're not going after them. And that's what's called trading. Pushing buttons isn't trading. And right now, I actually shared, this is the futures we're looking at. Futures are fractionally up 3 points, down 3 points on the NASDAQ. And what we're going to focus on, because we have regurgitated SPX so many times, is the NASDAQ. Again, it is that time of the year where not only is the frustration, which I asked 3 other colleagues of mine, hey man, can you share me the video that you're sending out to your members? And the 3 of them were pretty much the same thing that I've been doing already, but a little bit more aggressive, because the clientele that they have are not 0 DTE day traders. They are a little bit more rambunctious, because they're swing traders, and they're having a very, very rough time with what we've got going on. Friday, OPEX Friday, December 15th, 21 points. That was the worst OPEX Friday, quad-witching OPEX Friday in my lifetime. And I'm only 51 years old, so I'm sure that even though they didn't have options before I was born, there was probably a worse Friday end of the quarter that took place, 20.84 points. The SPX did close red, down 36 cents. So the quad OPEX trade, which pretty much, I don't know how many times to write it on my forehead, was the main priority focus for the week, as well as getting a red week. But instead, we got a 7th green week. So now we are going into the 8th green week in a row.
I don't drink past monkey, like to be funky. Nickname Easy E, y'all 8-ball junkie.
Easy E bringing it into town. So a red close below the previous close on Friday. A red close below the open on Thursday, 1.5 points. As you can see, there is zero pressure to go and take profits prior to the start of a new tax year, which begins in just 2 more weeks. Very similar to 2022. On the spreads, again, the one that worked, 47.25, 47.20 for the red close. The risker trade for the better credit, the 47.05, 4700, shared with you there in the spread room as to why that is a trade and why that trade should work. And as we saw there at the end of the day on Friday, with the low of the day being at 47.04, did not work. Chicken Fried, I applaud you. I'm very proud of you after, had a conversation or two with you. I'm extremely proud of you for a number of reasons, but especially for what you shared there about risk management and not overstepping the lines in any way, shape, or form. We have been, what I color code here on the SPX spreadsheet here in purple is the VIX under 13. What I've got in blue is the VIX under 21. And, we had that one visit where we were above 21. Oh, man, I don't even remember. Where is it? I've got to go back and change it. But we had the VIX above 21, and I unfortunately color-coded it because I was automatically assuming it. So I've got to go back and fix that. VIX was over 21 1 day, 2 days back during this dip. Here we are with the VIX under 13. Extremely difficult to get anything in credit with a 13, 12 VIX unless you're going right at the price action. And it's better than playing the calls and puts, because if you're trying to play the calls and puts, you're getting these 25, 26, 25, 30, 32 ranges. And then out of the blue, not necessarily out of the blue, but then you are getting a walloper big range. And again, even here, 47.09, 46.43. Didn't do the math, could do the math. 66 points from the high to the low. But that was to the upside because that was filling our gap from the other day. So we still have not had any dip at all on SPX of 50 points or better. And like my other colleagues that I was talking with all last week, shares of what they were sending out to their clients, their members, this is period, the end. Stop fucking discussing it. It is a blow-off top. The exact same kind of blow-off top like you had going into the end of January of 2018. The exact same kind of blow-off top as you had going into the March highs, the August highs of 2022. And in fact, I'll bring you on to that here. This is, all right, this is the bullish percent index of the SPX. It was developed by Abe Cohen back in the 50s. It's what they call the breadth indicator. When you get above 70, you're overbought. When you get below 30, you're oversold. And as you can see here, going back on the weekly, it's pretty easy to find where COVID is. It's pretty easy to see where your greater than 70 and even more so greater than 80s are. And if you go back with your SPX chart and you throw it on top, or if you're a paid member on stock charts, you can throw SPX down there on the bottom, you will see that breaks above 70 and then retracements below 70 are 100% automatic significant sell-off indicators. That is when, like I've said before, when the selling will actually accelerate is when you start breaking down below levels. As you see here down on the bottom, breaking down below 30. As you break and close below 30, it is a major sell-off, with a break back above 30 being the first indicator as to say, buy the dip. As you see here, here is your March low, right below 30. Here is your October low, well below 30. 2 weeks in a row. Come over onto the daily and see where we're at. And looking at the daily, just going back from the beginning of the year, from 2022, you can see your dailies as they break above 70 and the breaks down below it. Time them, go out, look at your charts, and you can see exactly what takes place. And here we are, as you can see, just looking back as to what we've gotten. This move, as close as you can get to the March move into into May, and then we started to fade off until NVIDIA created the word AI, and then we had our big boom up into July. Here we have zero pullbacks at all, zero, as we continue to talk about. And again, focus. This is a chart that goes to 2022, the beginning of it. The primary focus that I continue to table pound is looking at March, June, September, December of 2024. So you can only do so much. So QQQ is where we're going to stick. Before we go to that, we are going back over here because I did notice something and I just want to bring it out. All right. SPX, 4 days in a row, plus 20% year to date. On Friday, we were plus 20% year over year. And I saw that once before. I saw it back here in October, where we were up 20% year over year, timed right in with where our October top was. Saw it again back here in June, where we were plus 20% year over year for a day, right when we got up there to 44.48, pretty significant, 44.34. And then we had about a 100-point dip before we went into our July top. So pointing that out is all that it is. 7 green weeks in a row, looking for that 8 ball. Up 15.47% on this bounce, 634 points. I have shared this data too many times that enough. QQQ, that's where we're going to stick with. 3 days in a row, up 50% year to date. If that's not ringing alarm bells in your head, then you pretty much got to get your head checked. March, June, September, December 2024. The track of the move, the bottom to the February highs, the dip, the July from the March lows, the dip, November bounce into where we are. It's all very symmetrical. It's not very difficult to go out and say, I should be looking 3 months, 6 months, 9 months, 12 months out, taking advantage of the cheap VIX that we have here, rather than zooming myself in with blinders like a horse, hoping to get jerked off and be trading short-term time frames. I'll put the trades out there for short-term time frames, but you're wasting your energy, you're wasting your effort. The trades are there. There is going to be money to be made on a daily basis, but you have to manage your exposure and your risk, or take it up the ass, which, it's 2023, gender, there's no gender anymore. Some people like that. So on to the charts. All right. I'm looking here at the QQQ, and I'm looking at a 15-day, 30-minute chart. And what I have here in white is the full moon. And as you see, we had a nice, okay, here we go. We're up here. We've made our move. We got our full moon. And I'm showing here in white, in blue, and in pink the 5-day moving average, the 10-day moving average, and the 20-day moving average. And again, full moon, excellent. 5-day moving average, broken. 10-day moving average, broken. Then they began to inverse. Second, third trading session of December. 10-day above the 5-day. And now we're hitting the 20-day. Bam, down on the 20-day. Bam, down on the 20-day. Still inversed. Bam, 10-day, 5-day. Now we're hitting the 20-day. And then December 7th comes around. We have a gap up. I have looked through everything that I've got there. I can't find why we had a gap up on December 7th. I can look back and check whatever I've got. And December the 7th, I have zero, donut, nothing. And then you had the jobs report the very next day. And that was our move up into that 4609, 4600s, which, hello, we have closed 3 times in the 4600s. 1 day, open, close, high, low. Rushed right through that whole decade. Century. Decade, century. 6:30 in the morning. What are you going to do? 4700s. So here we are. Sam, you missed that. You didn't color code that properly. There you go. So we did have that one dip down into 4694. So again, for now, short term, 4694 on the SPX is your bottom. Breaking that FOMC low, which I've shared on the charts, 4683, that is your second little warning. And it doesn't even get nasty until they break down below 4546, 4537 from back November 30th, back on December 6th. So back on the QQQ. Again, had everything right there. It looked absolutely beautiful. It looked spectacular. Had that gap up there on the December 6th, the day before the jobs report. And then the jobs report comes out and it's horrible. It's terrible. It's absolutely fucking horrific. And wham! Here we go up into CPI, up into the FOMC meeting, up into we are not even thinking about cutting rates. And then Fed's Bostic, which is going to be speaking this week on Tuesday, comes out and says, yeah, we could probably see 2 rate cuts this year. Yeah, we could probably do them in Q3. And we went up on Friday. And we still have our little gap there to be filled from Friday, from Thursday night. Very tiny. But your bigger, broader, wider picture on the QQQ, I mean, if you don't see an opportunity in that, you didn't go to college and you didn't go drinking. Wrong way. This way. Here, talking again about your full moons. Full moons, perfect. September high. Boom, perfect for the little dip. Up into the October highs. Bam, October bottom. Boom, full moon. Excellent. Knew that. We're long. Nothing. Absolutely nothing. Nothing whatsoever. No kind of dip at all. This was our blow off top right here. This was our blow off top into the October high, September high area. Absolutely perfect. Perfect. Everything is perfect. Hell, our RSIs are screaming, get short. And all we get is this little fractional dip. And then from there, more fake news, bullshit, whatever it is, September 15th, CPI, could be what it is. And we go into the full moon in December. Bam, little baby dip, everything's looking good. And then here you are, which looking at this from what it is, because there is absolutely nothing of structure other than a blow off top, is you have an A and a B and we have just made it up to the 100 extension, or where C equals A. We are well above 5-day, 10-day, 20-day, 50-day, 100-day, 200-day. All of that was compressing in a perfect scenario until we got into this area right here, which was the second week of November and started to actually show off here in the beginning of December. And here you are. Wider picture, looking off the October 2022 lows at your 1-2, 1-2, boom, perfect 3, just above the 161.8 extension, perfect little dip, right back down to the 100, no overlap, everything looking spectacular on the wider time frame as a 1, 2, 3, 4, 5, other than that this 5 has zero structure to it at all. One move, one little dip, another one, you could call that. That's not even going to be a 3. And then back down. And even more significantly is when you look at it from a, yeah, there you go. I'll move that back to the clean bear and bring you back over here. So yeah, again, what I was showing is your dips or your unfilled gaps. These are your unfilled gaps that are going all just only to this October low. I haven't color coordinated the ones on the NDX that are below this going even further down, but I do have them on the SPX, and I think I've shared them multiple times. So again, moving off of that, perfect structure here. Absolutely perfect coming off of the October low. 1, 2, 3, zoom it even further out, and you can really see how you're right back up there, right at the all-time highs, and zoomed in, everybody looks at this and says, it's a breakout. It's a rally. Well, now zoom yourself out a little bit more, okay? Here we are talking about the beginning of time when mommy and daddy kissed each other, and 9 months later, a baby came out, and the NASDAQ was created back here in 1985. You had your rally up into the dot-com highs, 4816. Then you had your 82% decline from that into the 2002 bottom. Cycle 1, cycle 2. From that 2002 bottom, which did not bottom in 2009 like the SPX did, which double bottomed, did not also break back out to its all-time highs in 2007 like the SPX did. Instead, you have here your 1, 2, right there, 2007, 2009. And then your 3, and here's your 4, and there's your cycle 3. Completed, done. Right to, show you right here, the 161.8 extension. Couldn't be better of your 2, 3, 4. Perfect. Also comes right here to your 400, little tricky drawing that I've got, but the retracement of the drop. 161.8, 73.01 helped me to find where the top was back here in 2018. A lot of you guys remember we were 10 points off from calling the top on the SPX in 2018. So again, zooming out and looking at your structure of where you're at, coming off of that 4 bottom, which was your 2018 lows, your 1, 2, 161.8, you come right up to your 261.8. And I'll zoom out again on this in a minute. And here's your 400 retracement extension, which all coincidentally just so happened to line up right at the exact same spot, which is right at your all-time highs. All of it is right there, condensed. Boom, boom, boom. 3 lines right there in a row, which is one of those things that when you draw on your charts, they all start telling you, absolutely, yes, this is your top. No question about it. Come into your space over here, which was a perfect retracement coming off of that high in the all-time highs. Your trend line was right there, and we gapped right over it, right at your 23.6 retracement or 78 0.4 on the dip in 2022. Perfect. And then all of a sudden, bam, as you see, you're at your October highs, your September highs. You have a perfect spot, perfect place to be. And the market decided to do its own thing, which, being where we're at, it still is very structurally sound from a wider point of view. From a zoomed in point of view, you're going to have a lot of difficulty trying to figure out whether or not we're going to go 1 point higher or 2 points lower. So as you go in to remove these studies, this final week of the month of the year, before you go into the condensed week of Christmas and the condensed week of New Year's, keep it tight, keep it light, and know you got 7 green weeks in a row. Possibility of an 8th one? Very much so. Trump had 9. There was 10. I think there was even a 12 way back in history. Actually, I'll look at that right here. Where are we? Clean one? No. Here we go. 7. 7 green weeks in a row. Had 7 green weeks in a row here. Had 5 green weeks in a row here. 4 going into our August highs. Did not have that over here. I will go on to the weekly. So as we go in there, and yeah, as you see, we had 14 in a row as we were going in here to 2012. We had 11 in our rally in 2017. Thank you very much, Donald J. Trump. 9 over here as we were going into the end of 2017. Another 10 in a row. Coming off the Steve Mnuchin PPT Christmas bottom back in 2018. And then followed by 8 after 1 red week. Uno, March of 2019. And this, again, was one of the greatest times to have been a bull. 7 in a row, 6 in a row. Pre-COVID highs. Boom. Here's your COVID drop. 5 in a row. 4, 8, 5 as we blew off into the top. So wide view, zoomed in view, whichever view it is that you want to do, my primary focus, and I will preach like Steve Harvey and Snoop Dogg behind the fucking altar. Buy your time, buy your peace of mind, buy the patience that will not force you to sit there and have anxiety issues about a couple of $100 fucking dollars. I will be in the chat room very early on Monday. And as long as we are trending in a 10, 15, 20 point range on the SPX, NASDAQ traded, here we go, man. QQQ. November 29th, 4.6, almost 5, 4.5, almost 4 on December the 4th. 4, 5, 5, 4, 4, 4 ranges, point ranges in intraday, almost 6 points on Thursday with a red close. And then we go into quad, OPEX, end of the quarter, Friday, and we can't even trade 3 points? Ah, man, don't waste my time. Don't waste your time. Most importantly, don't waste your money. Your money is protected when it's in cash or it is further out with the strikes like I've showed you. Trade your pocket change. Trade the change that's in your ashtray. Don't expose yourself, regardless of what bullshit headlines you're hearing or what sentiment you think is going to be the trigger for the day. 5,000% trades over there on SPX when they're timed right. 1,000%, 1,500%. That's for $50. It's for $100. It's for $25. You don't go putting big money into any of these trades as we go into the holiday season. and I will leave you with 32 trade program. The 32 trade program I have done multiple years in a row. I learned it 25 years ago, and I have only been able to make it up to trade number 29. I made it to trade 27. I made it to 25 twice. I made it into the 20s, 19s, everything like that. But I am an asshole. You all know that. I judge myself. And I have always wanted to go from trade number one of $1,000 of risk, 30% is what I'm looking for, and then taking that trade and the profit and compounding it into the next trade and going me being the asshole that I am, going all the way to trade number 32 without taking a loss. That's me. That's what I want. But I've been doing this 27 years. For a regular person, the way that I've always structured it, and when a trader gets into trouble, I mean, even Elongate has gone back to this. You start getting into trouble. You start making some really shitty trades. You go, okay, that's it. Okay, I got to go to rehab. This is rehab. $1,000. That's it. And you are looking to get your 30% gain. And if you are trying to do this on a zero DTE because trading has zero DTE options, I think you're a fucking idiot. I do. That's not the way that this is supposed to be. This was actually well before zero DTE was even created. $1,000 risk, 30% gain. Take some fees and commissions off, call it $280 profit. And you go on to trade number 2, and you go on to trade number 3, you go on to trade number 4. By the time you're into trade number 4, you've doubled your money. 3 trades, you've doubled your money. Now, if you aren't proud of yourself for having gotten to that stage right there alone, then, mommy dropped you on your head or, didn't breastfeed you enough, gave you too much powdered milk. But as you get to these levels, trade number 4, trade number 5, everything gets so much simpler for you because now you have your stop loss. Your stop loss is right there for you. It's right in front of your face. You go into the trade, trade number 5, $2,732. If the trade would drop down to $2,117, the value of what you're in, that's it. Stop out. And you redo trade number 4 over again. If you want to be a little bit wider, a little bit riskier because you know what you're doing, you know how to trade, you're not having, what is RSI? What is CPI? What is OPEX? If you're not asking those kind of questions, you're already well above the majority of people that are trading. But if you are in this trade, $2,732.48, trade number 5, and you drop down below 21.1728, trade number 4, and you decided, nah, this trade is going to work. I have the time. It's going to work. You have direct access to me to ask me messages over on Slack, email me at any time. But worst case scenario, you use trade number 3 for your stop loss. That should your 2,700 go down to 1,700, you just do trade number 3 over again. And I know already I can hear the feedback going, oh, but I lost $1,000. I'm down $1,000.
Oh my God!
Then, maybe trading really isn't for you, You can buy soy wax off of Amazon. You can get, effervescent oils or whatever the fuck they call them anywhere. You can make them yourself. Make candles. Go sell them on eBay. Sell them at your local market fair on the weekends. Stop trading if you can't take losses, because nobody on the planet is not going to take losses. Taking losses and being exposed properly is the way you get to be naked on the beach and don't have people laughing that you got a small dick. Have a great Monday, tomorrow morning. Enjoy your Sunday. Last thing I'll leave you with, one of the best jokes I've heard. Israel-Palestine conflict. Y'all motherfuckers need Jesus.